Hi, Jonathan York from Bay Financial Partners, looking at investment markets. US equities are really pushed on and sort of set record highs, really on the back of a number of items. Now you've got earnings that were much better than anticipated for third quarter, and also guidance for fourth quarter wasn't too bad either. You've got a sort of tentative deal coming out on the US-China trade talks, where China sort of agreed to attentively to the sort of phase one, and now looking to extend that going on to sort of phase two or maybe phase three. You saw a cut from the Federal Reserve as well, targeting rates now at 1.5 to 1.75. That appears to be sort of it for a while. They now appear to be on pause just to see how these sort of the last three rate cuts has sort of impacted the US economy. But also as well, a sort of a big talking point as well has been that the US are now going to allow certain companies to actually make transactions with Huawei, the Chinese telecommunications company. You remember, that President Trump has sort of banned all dealings with that company, and it's just going to be interesting to see how that sort of plays through. Is this a softening from the US administration going into election year? So certainly, a lot of the excuses that investors weren't investing, sitting on the sidelines, wall of cash just sitting there, have slowly been sort of removed or sort of taken out of the equation. And potentially there is quite a bit of cash sitting on the sidelines now, waiting to be deployed going into year end. And that really should drag most of the sort of global equity markets higher as we head into December and year end. And all the time, obviously, as well, President Trump sort of fighting the impeachment investigations. He's labelled that sort of the biggest witch hunt in American history, and really sort of trying to deflect at every sort of angle on that. But clearly the Democrats have got an agenda, and it's just going to be interesting to see how he does play through. No one really expects him to be removed from office because certainly the Democrats don't have the votes in the Senate. But I really think what they're hoping to do is sort of highlight some of these sort of shortcomings going into the election year in 2020. Oil sort of pretty range bound, really, sort of plus or minus a couple of bucks from sort of 55 on WTI, and really showing very little signs of changing at present. And obviously in the UK, the big talking point has been the extensions for Brexit and the election now on December the 12th. And it's just going to be very interesting to see how that sort of plays through. Obviously, Brexit will be a big talking point. UK economy hasn't been that sort of strong, but obviously it's had the this sort of shadow of Brexit hanging over it. And it's just going to be interesting to see how the political parties align themselves. One, just going into Brexit, but also what they're going to do to the economy going forward as well. A little bit closer to home, the Australian economy appears to be picking up. Certainly the housing market's looking a little bit more robust. Obviously, interest rates there, record lows, 0.75 on the official cash rate. That's really, really sort of taking mortgage rates, really pretty low levels, and that's given a boost to the housing market, which is sort of, given a little bit of a pickup in sort of consumer confidence, etc. And that's starting to sort of filter through into the wider economy now. And obviously being helped as well is sort of, less of a threat from global trade. Now the US and China trade deals are sort of appears to be making sort of headway going forward, coming to a resolution. Here in New Zealand, sort of quite interesting, potentially there appears to be a few sort of cracks sort of showing in the coalition government between New Zealand First and Labour. But in terms of the economy, Prime Minister Ardern has just sort of negotiated a beefed up trade deal with China, which certainly should be beneficial for the New Zealand economy. Obviously, record low interest rates at 1%, looking like they're going to go lower heading into 2020. And that, again, has given a little bit of a boost to the housing market. Certainly the Auckland housing market has started to pick up a little bit. That had been a little bit of a laggard in the last sort of 6 to 9 months. And again, if that is the case, that sort of, again, just sort of spreads a little bit of confidence out there. Consumer confidence sort of picks up, maybe a little bit more spending coming through, and the economy starts to pick up and grow a little bit stronger. But as I said, really, if that's on the back of lower interest rates, obviously the flip side for that for savers is sort of lower bond rates and lower term deposit rates. And if you are looking for income out there, there are quite a few alternatives. And if you're interested in discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.